Should you invest in Sirius XM? Let's analyze it on GrowthShares. This analysis is split into three factors: the business, the stock, and the price. Within each factor are a total of 11 metrics from business growth, performance, to intrinsic value. Each of the three factors and 11 metrics are given a grade from 0 to 99, with 50 to 59 being considered average. Each company belongs to a specific sector of the economy. My analysis cleans the data so that we can compare companies between different sectors effortlessly. The three factors are then graded and combined to get our final grade. Most companies will fall into that average range, since most companies are indeed average long-term investments. Before we begin, there will be quite a few numbers and metrics in this video, so I've made a separate video detailing everything to get you caught up. I encourage you to pause this video anytime so you can better understand the numbers. First, let's look at the company's business factor, which accounts for 45% of the analysis. The business is the most important part of this analysis. Everything else should be secondary when it comes to investing long-term. This factor basically asks the questions: do we think this is a good business to own? The business is made up of these 6 metrics, from growth, efficiency, to market dominance. Each are weighted based on importance to this factor. And when we analyze them, we get their metric grades. When we put them together, we get the company's business grade. Next, let's look at the company's stock factor, which accounts for 35% of its analysis. The stock is important because we want to know if investors see value in the same business. We still want a return on our investment. This factor basically asks the question: will the stock grow enough in the future to justify an investment? The stock is made up of these 4 metrics, from performance to dividends. Each are weighted based on the importance to this factor. And when we analyze them, we get their metric grades. When we put them together, we get the company's stock grade. Third, let's look at the company's price factor, which accounts for 20% of this analysis. The price is important because it tells us whether the company's stock price is attractive enough for us to buy in. This factor basically asks the question: what is the most you should pay for the company? The price is made up of only one metric, the intrinsic value, or fair value price of the company. Here's the company's price grade and intrinsic value per share. Before we calculate our final grade, consider becoming a GrowthShares Patreon member and get access to my spreadsheet with every grade from every company I've analyzed. It's updated all the time. Head to patreon.com/GrowthShares or click on the link in the description. By combining the business, the stock, and the price, we get the overall outlook of the company, which gives us its final grade and its type of investment. This analysis uses public financial data, research, and a proprietary algorithm to come up with this company's grades. But what are your thoughts? Do you agree? Want to talk business? Email me and follow the instructions on the screen. Invest wisely, and as always, take care of your money.